In this video, I want to talk about the stock market, and I want to talk about something that I don't usually talk about on this channel, and this is stock market order types. So usually I'll tell you guys to invest in ETFs and index funds and invest in a Roth IRA or some other boring way of investing where you can get some secure returns on your money and less risky investments. But today I want to talk about market orders. So limit orders, stop limit, and all these other stock market order types. And this way, if you open a brokerage account like Webull, for example, or even at Robinhood, and you see these things, you'll understand what they mean and you'll know how to use them. So with that said, if this is a topic that you really wanted to hear about and you want to learn about the different stock market order types and how to use them, be sure to stick around to the very end of this video, as that's what we'll be discussing in today's video. And before we jump into all this information here, we'll be kicking this video off with a $100 giveaway, 4 lucky winners, one winner each week of $25. And all you have to do for a chance to win is to drop a comment down below in the comment section, as we'll be selecting a random comment as a winner, and then hop on over to my website, and the link is down below in the description, and then subscribe there with your email address, as that's how we'll be announcing the winners every single week. Now, with all that said, if you are new to the channel and this is the first time that you're seeing me, my name is Ian, and on this channel I talk about ways to make money, ways to save money, ways to invest your money. I talk about bank accounts and credit cards and everything to do with personal finance. So if you like these types of videos and these types of topics, be sure to give this video a thumbs up. I'll really appreciate it. It helps the channel out a ton. And it's also 100% free to give this video a thumbs up, and also subscribe to the channel with all notifications on. And that way you'll never miss the updates of when I post new videos, which is every single day on this channel. Now, the first thing that we'll be talking about in this video is a limit order. And a limit order, simply put, is to buy or sell a stock at a specific price, or the price that is not the current market price. So for example, if you hop into your Webull account and let's say you want to buy a share of Apple stock and the current market price is $100, and you think that Apple stock is going to fall below $100 in 2 hours or 2 days, then you could put in a limit order to purchase the stock when it reaches the price that you want to purchase it at. So for example, if the stock is valued at $100 right now, or that's the current market value, you could put a limit order in for $90, and then if you're asleep or if you're busy with work, or if you're doing something else and you're not staring at your computer or the app on your phone, and the price of the stock actually drops from $100 and goes down to $90, then the limit order will be executed and you will successfully purchase that stock at that price that you had set the limit for. So this is really good, and you can set this forever until you want to cancel it, and you can also set this only for 24 hours. Now, you could also do the same thing with selling stocks. So if you have a stock right now, let's say you have a share of Apple stock and the market value right now is $90, and you bought it at $90 and you think that the stock is going to go up to, let's say, $150 next week, and then it's going to crash back to $90, then you could set a limit order to sell once the price hits $150. And then that way, if you're asleep or you're working or you're busy doing something else and that happens, the order will be executed and you'll be able to successfully sell that stock at that price. And this is why this is a very useful stock market order type. Now, depending on the investment app or brokerage that you use, you may or may not be able to do this because, for example, with M1 Finance, they don't have this functionality. So you are stuck with whatever the market price is for whatever you want to purchase or sell when that trade actually takes place during the trade window. But if you have an app like Robinhood or Webull, which is more suited for day trading, then you could have access to all these features using an app. If you don't have this functionality and you would like it, I would recommend Webull, which is also free, and you can get 2 free stocks after you deposit $100 in your investment account, and those stocks can be valid at up to $1,600. So be sure to take advantage of that opportunity if you haven't already done so. Now, the next order type that I want to talk about is the market order, and this is the simplest one because this is selling or buying at the current market price. So the previous example with the limit order, you would set a limit or a number or a price point to purchase or to sell that stock if it gets there. But with the market order, you're just simply purchasing the stock at whatever price it's currently offered for on the market, or selling it for whatever someone is offering to pay on the market right now for that stock. Now, the next type of market order is the stop order, and this is sometimes referred to as a stop loss order, and they are the very same thing. And this one is very similar to the limit order, but the main difference here is that instead of selling or buying at the price that you set it, it buys at a price above or below depending on what the market says. So for example, if you wanted to buy that one share of Apple stock and it was gonna cost you, let's say $100, and you set a stop order to purchase this, once it fell below $90 or below $100 rather, you would purchase that share of Apple's stock at whatever the market price was, as long as it was below $100. Now, in the previous order type, which was the limit order, it would purchase it when it hits $100. It would be right on that $100 mark, but here it purchases it at whatever price it is, as long as it's below that mark. Now, the same works if you're trying to sell. So if you decide that you want to set a stop order to sell Apple at, let's say, $150, as soon as it hits $150 and goes over, it will sell that stock at whatever the market price is for it once it's over $150 or whatever limit you had set. Now, another type of order is a stop limit order, and this is also similar to the stop order, but the main difference here is that the stop order that we just discussed converts into a market order once it gets to that limit that you said, but the stop limit order will convert into a limit order. So again, I'll give you guys an example just to make some more sense of this and just to make this really simple and easy to understand, right? So let's say you set a stop order to buy a particular stock at $100 per share. Once the stock hits $100 per share, it will then convert that stop limit order to a limit order that will buy it at the price that you set, which was $100 or a better price. Actually, another example is if you had invested in, let's say you invested in Apple stock and you bought into the stock when it was at $100, and now the stock is valued at $300 for argument's sake, and now the price of the stock keeps tanking, and so you can set a stop limit order to sell at $150, and that way if the stock actually dips or keeps dipping, if it gets to $150 then goes below, it will be converted to a limit order and that will be executed and you'll get to sell that stock. But if the stock keeps going down but it doesn't hit the bottom that you've set, which is $150, and it recovers, then nothing happens and you get to keep your stocks. So it's also very helpful in preventing you from losing out on all your profits if you are investing in the stock market. Now, finally, I want to talk about the trailing stop order, and this one is an order that ensures that you benefit once the stock that you're investing in keeps going up in value and increases, and this helps you to execute a stop limit order to limit your losses when the stock starts going down and isn't moving in your favor anymore. So again, for example, let's say you had that Apple stock, right? And the stock keeps going up in value and you're happy, but one day the stock starts going down and you realize that if the stock goes down to $100 and goes below, you're going to start losing your profits and you're going to lose out on some money. So you could set a trailing stop order for 20%. So if the stock dips by 20%, then a sell will be executed. And that way you prevent yourself from suffering a huge loss, and the percentage is determined by you, and you can just think about how much you're willing to risk or what percentage you can afford to lose before you actually want to pull out of that investment. And this will be the percentage of the current market price. So the point here is, instead of sitting and looking at your brokerage account and trying to do all the trades manually, you can actually use these orders and they will help you a lot to automate the process and better trade on the stock market. And if you're planning on becoming a day trader, or you're just doing some trades, short-term trades to make a lot of money, then you definitely need to understand at least these basic stock market order types. Now, if you guys are into day trading and I missed any other very important stock market order types, then be sure to comment them down below so that anyone else that comes across this video can see what those are and they can benefit from that as well. Now, before you go, if you haven't already done so, be sure to give this video a thumbs up and also subscribe with the notifications on, and check those links down below in the description where you can get free and helpful stuff, which includes free cash, free crypto, and free stocks. And with all that said, thank you guys so much for watching, and I'll see you tomorrow in the next one.